Hello everybody, Jackson here with the Wall Squad. Today we'll be talking about inflation and how to beat it in the year of 2022. So looking at inflation in the past, it's usually around 2 to 3%. You can see last couple years, it's literally been either 3% or lower most of the time. And just since COVID, since they pumped a ton of money into the system, it's more than half of every dollar ever created was created since COVID, right? And that's a crazy number. But considering that, you just have to think of all the cash in the system. And of course, the value, not the value, the price of goods is going to go up. So we can see here, all items grew 7.12% year over year. This is compared to last year, December 1st, 2020. And then all items deducting food and energy only grew 5.49%. So that's still the highest since the 1990s, early 1990s. So it is something to worry about, that's for sure. So we can see right here, inflation soared 7% 2021, biggest increase in nearly 40 years. Increase slowed down. Core inflation strips out volatile food and gas prices, rose 5.5%. Used car and truck prices shot up 37% last year. Shelter rose 4.1%. Energy costs increased 29%. So basically what it's saying is if you're not making more money, then you're out of luck, right? Because this time last year, all of these numbers are up, right? Energy 29%, shelter only 4.1, used truck and car prices 37%, all items 7%, all items minus food and gas 5.5%. So this is just what they're telling us, right? Maybe, there's another story behind it all. We don't really know. However, what we do know is we need to beat that 7% number. That should be a goal of ours. So looking at some investments, right? We're looking at the S&P 500. Check out the year performance. You can see it did 22%. So while inflation was 7%, the S&P 500 returned 22%. So that leaves us with a 15% gain, right? And that's pretty dang good. That's amazing, actually, especially in an index fund like the S&P 500 or the ETF. So what you want to do is continue to invest. The one thing you don't want is cash, because cash is an automatic loser. Excuse me, you are automatically going to lose 7% a year, guaranteed. And that's just within the last year, right? It could go up that inflation number. So looking at SP 500, still, it will probably continue to go up at least 7%. We don't see any sign of slowing down. So definitely a solid option, but cash is not an option, right? That is your last, you're better having it in some type of risky asset rather than cash, because cash is an automatic loser. Let's look at, some stable stocks like Procter and Gamble. We could see within the last year. Oh, that makes more sense. Procter and Gamble, one of the dividend aristocrats. We can see still up 16%, so still be inflation. Stocks like Coca-Cola, same thing, up 22%. Value has definitely taken off. We've already talked about that in the past. General Mills, same thing. You could obviously see from 55 to 70. Now let's look into stuff that's not stocks, right? We're going to look at crypto. Obviously, crypto is a huge one because more money in the system, in the actual traditional financial system, a lot more people are being shifting towards crypto because it is Bitcoin, especially the supply is fixed when the US dollar is, of course, not. So you can see Bitcoin hovering around the 4,400 range. Not a terrible deal. We're getting it at a discount of around more than a third, so that's not bad at all. And that's just Bitcoin. We could look at Ethereum. Same thing, down a third. We could look at Solana, down even more, down 44%. So what I'm trying to say is cash is the last thing you got to invest in. Crypto is obviously something very interesting to look into because it's away from the traditional finance system, and that's what's wrecking us right now is the inflation coming from the traditional system that's hurting our purchasing power. And crypto does help that, especially the coins that are supply fixed. Now, let's say you don't want to speculate in these types of assets, right? What you can do is what we talked about in the last video. Simply put it into a crypto savings account, essentially, or DeFi. It's like DeFi. However, what I'm talking about here with BlockFi and Celsius is actually just centralized finance, just in crypto. Um, it's a company behind it. But anyways, they're paying 8 to 9% a year on stable coins, which is, USDC. They don't go down in value. You're earning, of course, you're beating inflation at that price, at that rate, but not by a very long, large margin. So you may have to speculate some more elsewhere, but you can put stable coins in these platforms. You can watch the latest video I made on Celsius, and you could actually beat inflation almost guaranteed if, inflation stays 7%. Now, if it goes to 15%, then, we're screwed, but it's at 7% now, so BlockFi and Celsius pay 8 to 9%. You could easily put that in. They pay out, Celsius pays out every week, BlockFi every month. And you could just see, BlockFi every month. So you could just see a compound in real time, which is very, very cool. So that's another way to beat inflation, BlockFi and Celsius. And then we could look at dividends, right? Larger than a 7%, which is kind of risky, right? Because 7% is that much that they're not paying, that they're not reinvesting into the company. So we have Altria, which is, cigarettes, EPD, AT&T, and then some other like real estates, conglomerates, oil, telecom. But what we really want to look into is the companies that could pay a dividend and survive it, right? AT&T had a tough year, just recently bounced off this 22 mark. But yeah, ever since they announced the merger with Discovery, it's just been downhill ever since until, just last month. So AT&T still pays a 7.6% dividend. However, that is getting cut with the merger finalizing. So don't buy in at AT&T expecting to get paid 7% a year. You have to look into the company more than just these numbers. BlockFi and Celsius, it's straight up 8 to 9%. With these, though, they could go down in value, right? Let's say we invest our money in, Altria, right? We buy a bunch of shares at 50, 51. It goes down, right, to 40, but we're getting paid 7% a year. That 7% is added on to our gains, but we still lose because the stock is down. With Celsius and BlockFi, however, the asset we're investing in cannot go down. It's a fixed rate. Well, that rate can fluctuate, but it's not like USDC could go up or down, which is pretty good. However, what we talked about earlier, investing in these cryptocurrencies, Bitcoin, Ethereum, Solana, you could actually invest in these cryptocurrencies and put them in the BlockFi and Celsius accounts, and they earn interest on those. So that's also a better way to get that risk in there, as well as the cash flow. So look into that for sure. That's a very, very generous thing that they do. I have some Bitcoin and Celsius just earning me 6 or something % a year. And I'd rather earn that than zero, just having it in my Coinbase account. So I hope this video helps. You got to prepare for this. 7% is not something to laugh at because that used to be the market average, right? Every year, 7%, expect 7% return. Now we're going to 10%. This year we did 22. However, inflation is at 7%. So now it's, 22 minus 7, we're at 15. and that's just in the stock market. So you have to look at cryptocurrencies, these crypto savings accounts, essentially DeFi, basically the same thing, but not really the same concept. So look into these different ways of growing your wealth because the cash will not do it. And that's just the answer. Cash will not do it. It will do the opposite. So I hope this video helped. If it did, please hit the like button and subscribe for more videos every Monday, Wednesday, and Friday. Thanks for watching.